Becoming a trader or investor can be very frustrating, but it shouldn't be, and it doesn't have to be, which is why I'm creating this ultimate beginner's guide to trading and investing. And we're going to discuss a lot of topics in this video, but first, the bad. Number one, we're going to discuss some of the bad habits or bad mistakes. But first, with the bad, the mistakes traders make. Number two, why they're dangerous. And number three, why if you don't correct these things, you will fail. And then on to the good things. Number one, the mindset. Number two, patience. Number three, skill set and learning. Number four, paper trading and practicing. And number five, fear and greed and your emotions. So let's dive right in, guys. Corey here. Welcome to the channel. Thank you so much for being here and being a part of the community. Be sure to subscribe if you're first stopping in and tap that bell so you know when I post great content like this, right? This content is amazing. And if you could give me a thumbs up, it's greatly appreciated. So we're going to dive into the bad first. Of course, we're going to talk about the bad because the bad are the things that you need to avoid. Number one, mistakes that traders make. The most important things to discuss is traders typically jump in when they're new and they want to buy and sell the same day. They want to trade indexes, ETFs, the very expensive stuff, which can cause you to lose a lot of money quickly. If you're a new trader, stop, clear your head, and think. You don't want to dive into expensive stuff or the most difficult strategies. Day trading and intraday trading, scalping, is the most difficult strategy to master and learn. You should be learning how to do this last. It is not lucrative unless you have a lot of skills. I've been trading for almost 10 years. And it's very difficult to make money scalping and day trading. It can be done, but if you have less than 1 or 2 years experience and you haven't learned the right way, you're going to burn money. You might make 20, 30, 40% return. Heck, you might even double or triple your money 2 or 3 days in a row, but you're going to have a loss, and that loss is going to kill all of your wins and throw you into the negative. In fact, many new traders will have several $1,000s in their account to start with, some $5,000, $10,000 or more, and after some successful trades, it builds up false sense of confidence. Then they end up blowing and burning the account. I strive to teach my students how to not blow or burn up accounts at all. To start slowly, like a snowball, and start growing it into a giant snowball. That's how you build a snowman. The exact same way. Start small, the snowball effect, that's where it comes from. Start small, go big. You can't try to go big in the beginning. This will ultimately lead to failure. That segues us into number two, why it's dangerous. These mistakes are dangerous because day trading gives you a false sense of hope when you make 1 or 2 successful trades, but ultimately you don't know why you made that successful trade. All you know is you bought shares or contracts, sold them a few hours later, and made a profit. But you don't understand why you made a profit except the fact that the price went up after you bought the call or went down after you bought the put or the shares. But ultimately, you don't understand why that stock went down. The fundamentals, the technicals, the news, the overall sentiment of the market. You guys at that point in time don't really understand what happened. So it gives you a false sense of confidence. And then you go to do it again the next day. And one time you get more greedy and you start leveraging 50% of your portfolio or more. And when you start leveraging 50% of your money and you have a bad trade, you could burn half or even all of that 50%. That means 25% to 50% of your portfolio is gone on one trade, which is another mistake traders make. Anything more than 5 to 10% is too much in one position. If you have a smaller account, you can obviously use a little bit more, 10 to 20% if they're good trades. If they're not so good trades, 1 to 3%. Again, these are things I teach in my one-on-one coaching, but this is very difficult for a beginner to understand. This segues us into the bad part number 3, why you will fail. If you have a mindset of just going into trading and just trying to learn with real money and not practicing and not trying to understand the market and have the proper mindset, you will fail. 99% of day traders fail and blow up their accounts. 99%. In order to be the 1%, you have to do your due diligence, your research, learn, practice, have the right mindset. You have to be very disciplined. And this is the reason why a lot of day traders fail. Day trading should be the last strategy that you implement into your portfolio. You need to learn so so many more things before you learn to day trade. Now, I'm not saying everyone who looks to get into trading is looking to day trade, but I would say 60 to 80% of new traders try to get into day trading first. It is the worst thing you can do because you will be able to day trade so much better once you have learned everything else first. So we're going to talk about the good now and how we can correct all of that bad. And before I do that, I want to let you guys know that this strategy and this overall guide that I'm making today is the core basics and fundamentals that I teach in my one-on-one coaching. So if you like this video, you like my way of teaching, and you want to learn more of this and want to learn the full structure of how to grow your portfolio from a very small amount like I did with $1,500 all the way up to $40,000 in only 6 months, and I have many students that are doing the same thing, you guys can sign up for my one-on-one coaching, Discord, and full training course at investwithcorey.com, right there on the screen or in the information box below. And if you guys want even more advanced training, I have my one-on-one masterclass bootcamp. I just filled my July classes, but I have a class opening up in August, which will fill very fast, limited to 10 spaces. So if you guys would like to jump in and learn and grow your portfolio and your financial freedom, I am here to help you do just that. Another one of these very important factors that I haven't even mentioned is buying versus selling options. You probably think buying options is better or buying shares is better, but what people don't understand when they're new to trading is that selling options has a higher chance of success, 80% versus 20%. And sometimes it's even more lopsided than that, but not a lot of people really discuss that when traders are looking to get into investing and trading. When people are new to trading and they're first getting in, they think about buying calls, buying puts. They don't really think about the differences between buying and selling and when to buy and when to sell. There's so many things to learn in the market. This is just one of those things that I teach in my coaching and Discord training course that is really not out there for beginners to learn unless they go hunting for it. And it's a mistake that a lot of beginners make, and it can burn or blow an account very quickly. So we're going to talk about the good. Number one, the mindset. You have to be very, very strong emotionally and mentally. In this portion, we're going to talk about mindset. You have to understand stop losses and you have to understand taking profits. When you get into a position and you start to lose a little bit of money, you have to get out when you realize the stock is moving in the direction you don't want it to. The trade is not going your way. You have to be mentally strong enough to cut your loss and move on. This is a very big problem. I'll give you an example. I'm sure you've had the exact same problem yourself. I know I have. You get into a trade and you start losing money. You start praying. You start doing all kinds of stuff. The stock's going to go back up. I promise. It really is. It's going to go back up. Come on, God, let it go back up. Then you realize you're down 50%, 60%, 70%, 80%. Then you buy it back or you get out, 80% loss. But then you get into a winning trade and it goes down a bit, it goes up a bit, and you're like, oh my God, I can't lose any more money. I'm just going to get out and take my 5%. You get out, it goes to 100%. We've all been there. You let your losers run like crazy and you cut your winners when you should be doing the exact opposite. Cut your losers and let your winners run. This is a mindset. You have to be prepared and have the proper mindset. When I see a trade going against me, I don't think about it emotionally like, oh my God, I can't lose money. I've got to prevent this. That's not what I think. I look at the chart, look at the technical analysis, look at the news, and realize this is not working. It's time to get out, everyone. I don't care. I mean, I do, but 20% loss, bye-bye. I cut my losses. It's almost like the cheating girlfriend or the cheating boyfriend, the cheating spouse. When they cheat, it's time to cut them loose, right? But there's those emotions that are telling you, I love this person, I can't let them go. But then your mind is telling you, no, they gotta go. This is never gonna work. Once a liar, always a liar. Same thing with the stock market. You can't let your emotions control your decisions. Mindset. I'm losing this trade. It's highly unlikely I'm going to win. Let's lose 25% instead of 60% or 100%. The same thing with winning trades. Don't get overly fearful and let fear ruin it for you. The stock is going up. It goes down a little bit. It doesn't matter. If you enter a trade and you're up 20% and it dips to 16%, set your stop loss at break even. Worst case, you break even. You lose no money. But you're doing this to allow yourself to run higher than 15% because no matter what happens, I break even now and I'm going to let it run. It's either I'm going to take 50% or I break even. There's no need to get out at 10 when there's a very good chance that the stock is moving in that direction that you could have 100. This is how you manage it without letting emotions get in the way. If you're getting into a position and you're up 10% and it falls to 8%, why get get out at 8% when you can make 50? Just set your stop loss at your entry price. You cannot lose any money this way. Now you're risking that 8% to go to zero, which is break even, but you could make 50%. Number two, perfect segue, patience. Nothing happens overnight. In fact, I love being patient in the stock market because the more patient you are, the more money you make. And a perfect example is you find a stock like, let's say, Square or Block, and you enter at $63 and you immediately sell a $64 covered call so you can make $70 in 1 week juicy premium. But then the stock goes to $68 and now you're trying to figure out a way to exit this covered call because you want to make more money. Patience. You cannot make money on the short position and the long position and then try to get out of the short position when you want to get greedy and make more money, because this is emotions. Instead, you enter Square as an example or Block at $63, wait for the stock to start going up, be patient. Once it hits 65 or 66, sell a $68 or $70 call, giving you so much more headroom. When you get into stocks, let the stock rise, then sell a covered call, or buy the shares, wait till earnings for it to pop like crazy and make even more money. This is patience. Time in the market beats timing the market. No matter how much timing you try to play, entering the bottom, exiting the top, it will never defeat time in the market. If I buy Square right now, or Block as an example, or Nvidia, or any stock for that matter, that's good, a good, fundamentally strong stock. If I buy that and hold it for 3 years, and you're buying it and then selling calls and then exiting and then selling puts trying to get back in, it's likely you're going to make a lot of mistakes along the way, especially if you're a beginner. It'll never defeat buying and holding. But there's a lot more strategies that can be implemented into holding. This is just one of them. Time in the market beats timing the market. Once you're really good, have lots of experience, many years in the market, then you can utilize the wheel strategy, which is very similar to time in the market because you're getting in and out rapidly, taking advantage of price fluctuation, which is a very good strategy. But as a beginner with less than 6 months or a year in the market, this is too advanced for you. Number three, the most important thing besides mindset and emotions is learn. You want to learn the most you possibly can. It's the most important thing that you'll learn, like I said, besides emotions, sentiment, and patience, mindset. This is very important. You have to learn technicals, fundamentals, financials. You have to learn candlesticks, candlestick patterns, the charts, exponential moving patterns, simple moving patterns, exponential moving averages, simple moving averages, Bollinger Bands, which are your chart fundamentals. You have to learn these things. These are your chart indicators, and they will help you understand why a stock's doing something and what it's going to possibly do next. But not only that, you have to understand how news affects stocks. News is a catalyst, and news always trumps anything on a chart. It does not matter how strong the chart shows a stock is going up. If bad news comes out, that stock is going down. So you have to understand how to implement the indicators, the chart, the technical analysis, the company's overall fundamentals, growth and strength, as well as the news. There is a lot to take in. You must learn these things before you can become a day trader, intraday trader, investor, or just a long-term investor / trader. You have to start out with what are calls and what are puts. This is something else that I teach very fluently in my Discord training course and my one-on-one coaching. Like I said, if you guys are finding all this information in this video very helpful, but you want one-on-one coaching and you want to take the plunge and learn all of it and learn all the in-depth stuff that I teach, you guys can sign up for my one-on-one coaching at any time. It's what drives me every single day. I want to teach you how to achieve the financial freedom that you deserve because I've achieved it, and now I want to help as many people as I can achieve the same financial freedom. So that moves us on to number 4, which is part of the learning process. Perfect segue into number 4, practice. You have to find a broker that's going to allow you to paper trade. An example is Webull, Webull. Webull is very good. It's going to give you a paper trade account, and you can set the amount of money in that account or the value of the portfolio to whatever you want. I recommend starting out small because if you can grow a $5,000 account into $30,000 in 6 months, then you could take a $30,000 account into $150,000 in the same 6-month period. It's always harder to grow a small small account. The smaller, the harder it is. I grew a $1,500 account into my current challenge account that I have in my YouTube videos that you have seen. It's almost at $40,000, and this only took 6 months. 1,500 into 40,000 in 6 months, using the strategies that I teach in my one-on-one coaching in Discord and in the strategies that I've used all over my YouTube videos. Paper trading is very important. Don't let anybody rush you or fool you. If someone tells you that you can jump in to day trading and scalping with very little experience and you only have to day trade for a couple of weeks or practice for a couple of weeks, they are lying to you. This is not the case. I've seen traders practice paper trading for up to 5 months and they still fail. Because it doesn't necessarily just matter how long you practice, how long you study. It's how much you're learning and how good your teacher is. This is critical. I have students that have grown their portfolios from $5,000 to $20,000 in 4 months. I have other students that have made $5,000 in the last week alone just on a few of my alerts. They're growing and they're learning very quickly. I have a very different way of teaching and my strategies are very safe. So again, if you're interested, you guys can sign up, information box below, investwithcorey.com. So this brings us into the last part, which is really one of the most, if not the most important factors when you are trading. It doesn't matter if you're day trading, intraday trading, if you are swing trading, scalping, investing, dividends, does not matter. It's more apparent though in scalping, day trading, or swing trading, and that is fear and greed, your emotions, and the overall market sentiment. When the market is greedy and everybody's buying everything up, you should be fearful and get ready to start entering short positions. When everybody in the market is fearful and they're selling everything off and prices are coming down, you should be greedy and buying it all up. Warren Buffett has said this time in and time out over and over again. He's one of, if not the smartest people to ever trade stocks or invest. In fact, there's nobody on this earth right now who's smarter than him when it comes to investing. This man basically invented investing. And I'm dead serious. He is very intelligent and he said the same thing. The more people sell off good stocks, that's be good stocks, not bad ones. But if people are selling off good stocks for no apparent reason, there's not really a lot of bad news or catalyst, but there's just fear because jobs or maybe CPI indexes and the prices are coming down. When people are fearful, it's time to greedy and scoop everything up. It might take 3 months. It could take 6 months, maybe even a year for a recovery, but most time it's within 30 to 60 days. When these recoveries happen, you're standing to gain 30, 40% in 1 year, sometimes even more. And it's really the best time to buy. I know this is confusing because this video is just the overall basics and the ultimate guide to understanding trading and investing. I know this can be confusing, which is why I broke it up into different sections. So this way you guys would understand the importance of every single aspect of trading or investing, just overall being financially independent for yourself and having financial freedom. The market, just like you, also has a sentiment. You don't want to be buying calls when the market has fear, just like you don't want to be buying puts or being short when the market is greedy. You have to understand the market's sentiment. So just like I was explaining before on the market also has a sentiment, just like you and just like me. When the market is greedy, you got to be ready to go short or at least be fearful. When the market sentiment is fearful, you have to be ready to go long, to start buying, and to be ready to start being greedy. This is how we counteract the market. This is how it works. Hedge funds and big companies take advantage of you, the amateur, the beginner trader. They know how to do this. They get you guys to buy when the stock is on the rise, and then they sell it off as you're buying it. Then the stock plummets and you're selling at the bottom and buying at the top. So you're selling at 62 and you're buying at 63. That makes no sense, right? You're losing $100 on every 100 shares. So why buy high and sell low? Well, that's the name of this game. That's how it works. And new traders, amateurs, beginners that are just starting out, they end up in this whirlwind. And the only way out is education and the guidelines that I outlined in this video. If you guys find this video helpful, give me a thumbs up, subscribe, and tap the bell as it greatly helps the channel grow. So you can see by following a set of rules, just like I've laid them out in this video, you can take yourself from beginner to intermediate in a relatively short amount of time. But these core fundamental basics take you from being a fish in shark-infested waters, everyone, to being the shark himself or herself. Do you want to be the shark? Well, that's my goal. I want to teach as many people as I can because I told myself when I achieved financial freedom, I would teach everyone my strategies, my way of thinking, which has brought me from as little as $20,000 all the way over to 1.8 million in my large account. This has also brought me from 1,500 to almost 40,000 in my challenge account. And I've taught many students the same thing. You have to start out the right way, slow, learn, and don't make the mistakes that are pretty much set in front of you intentionally by hedge funds, corporate America, and all these fake news catalysts that come out, everything to manipulate the market. Don't fall for these tricks. You have to learn the right way because, like I said, when you jump in this water, you are swimming with sharks. You cannot do it blindly or ignorantly, and you can't do it on your own. You really need to learn the proper way. Thanks so much, guys, for being here. I really appreciate it. If you like this video, go ahead and subscribe, tap the bell, give me a thumbs up, as it greatly helps the channel. And like I've said a few times in this video, if you guys want to learn more, this is just the basics. I teach all of it in sections in my one-on-one training, Discord, and full training course. If you guys are interested in joining my masterclass boot camp, learning all the dividend strategies, all the major growth strategies, I would love to help you, as that's what drives me every day, is helping you guys achieve the financial freedom you deserve, because I live a great life. I'm very happy. I have financial freedom, but what worries me the most is you guys, teaching you how you can become financially free. You guys can sign up at any time at investwithcorey.com, right there on the screen or in the information box below. I just started my second masterclass boot camp for the first week of August. 10 spots remain. They're going to fill up really quickly, and then you'll have to wait till September or October for the next one. So if you guys are interested, you can also sign up for that. I look forward to speaking with you. Don't worry, guys. I know this video's over, but I picked out another video just for you, and that video is right there. You guys are going to love it. Click that video. I'm over there waiting for you guys. Remember, let's grow our wealth together. Click it. I'm waiting for you. I'm over there already. I'm in 2 places at once.